Hey guys, Toby Mathis here, and the FinCEN real estate reporting rule that's been in the headlines now, it went into effect on March 1st, 2026, just got struck down, nationwide injunction, and this is very similar to what was going on with the Corporate Transparency Act of last year, if you remember, dealing with all that nonsense of where the circuits were staying, and then eventually the government relented. That's what's going on here. So if you've been doing all cash real estate deals or you've been avoiding them, more importantly, because of this new federal reporting rule that went into effect just weeks ago, you need to hear this information. A federal court just struck it down nationwide. And while that's good news, there's a catch that every investor needs to understand before they change how they're operating. So let's kind of break this thing down into pieces. First, what was the rule? Let's just talk about that real quick. And why do investors even care about this? Well, back in August of 2024, so this is a while, the Financial Crimes Enforcement Network, which is called FinCEN, issued what they call the real estate or residential real estate reporting rule. And the stated goal was fighting money laundering. They were worried about people coming in and buying single family houses, duplexes, threeplexes, fourplexes, right? That was what it was. They were worried about people using money, laundered money to buy these properties with cash. And so the government, they've always suspected that these all cash deals, especially when they're purchased through LLCs and trusts, which is what this rule is specifically designed to target, were being used to hide dirty money. And so they wanted disclosure of who these people were. So they said whenever a residential property is sold for cash with no mortgage, no bank lender involved where there's a know your client rule, someone at that closing has to file this real estate report. And we're talking about who the buyer is, the seller, the property address, and exactly how it was paid for. And if you're buying through that LLC or trust, you were getting hit by this rule. If you're an individual buying, you were not. It's always about the entity that people were using in their minds to hide. So for investors like me, this is actually a big deal. For my clients, this is a big deal. A huge portion of the real estate world, fix and flips, buy and holds, and syndications is purchased without traditional financing. And the rule was aimed squarely at that world, unfortunately. And it wasn't that they were saying you were doing anything wrong. They were just they know that the crooks were kind of using this money to go do that. And so this rule, which was passed in 2024, in August 2024, it was supposed to go in effect last December. But FinCEN pushed it back till March 1st of this year, 2026. And it lasted less than a few weeks, right? So what was the lawsuit that got this one? There was actually two, but I'm going to talk about the one that actually just nixed it first. And it's a Texas-based title company called Flowers Title Company, sued in federal court. And of course, this is the Eastern District of Texas. This is going to matter in a minute. And they argued that FinCEN simply didn't have the legal authority to create this rule. Hey, you guys shouldn't be doing that. And they challenged it under the Administrative Procedure Act. If you remember the Corporate Transparency Act, you had courts doing the same thing. And this act governs what federal agencies can and cannot do. So March 19th, Judge Jeremy Kernodle, I think I probably butchered that, but a judge sided with the Flowers Title Company. And he granted what a lot of federal courts are doing now. He granted a summary judgment and vacated the rule, not just in Texas, but across the entire country. So it's a nationwide injunction. So let's kind of explore this thing. So why did they throw it out? So FinCEN relied on the Bank Secrecy Act on two provisions. The first was the suspicious transaction portion. The court's problem with this is FinCEN is basically saying anytime you buy with cash, it's automatically suspicious, which the court's not buying. They said, hey, as an investor, you know that's nuts, right? It's absurd. Cash deals are very common. They're legitimate, and they're usually preferred when you're involved in the real estate business. And the court basically said, yeah, we agree. This isn't always suspicious when people do this. You can't label an entire category of normal transactions suspicious just so you can kind of do this blanket surveillance regime, for lack of a better word. The second justification involved a provision allowing FinCEN to require certain information gathering procedures. And the court said that interpretation was just beyond what the statute actually says when it comes to this particular reporting. So this residential real estate reporting rule is just too broad. So they basically said, FinCEN, you overreached. The rule is basically unlawful. And basically the court said, no, we're shutting it down. So what does this mean for you? So we're 2026. And when I'm recording this is right at the end of March, early April. As of today, the rule is unenforceable. FinCEN posted an alert on their website confirming that title companies and settlement agents are not required to file this reporting, the residential real estate reporting, and they face zero liability today as long as this order is in effect. Now, this is important for you to understand. Like, if you remember the Corporate Transparency Act, it was overruled, it was bounced around, then there was there was in multiple circuits. And this is why this is important. And there's another circuit that looked at the same thing and came to an opposite conclusion. There was a court in Florida at the end of the year of 2025, so in December of 2025, they upheld it. So we have two courts in two different circuits coming to two different conclusions, which means you have a split, which means we're probably going to need the Supreme Court to weigh in. What happens in the interim? I don't know. The Corporate Transparency Act, it was struck down, then it was put back in, then it was struck down, then the court or the FinCEN basically said, hey, we're hands off, we're not going to enforce it. We're not going to go push this forward under the current administration. That could go away tomorrow. And the same thing could happen here. So what is a smart investor going to do? Stay informed and watch. Go to the FinCEN website or check my channel out because I'll be throwing that up. My partner, Clint Coons, always puts good content up too. Check it out. Because we know what the rule plays. And by the way, there's workarounds. I have a video ready to go that was on kind of the workarounds. I might still post it. We'll see. So watch the channel and see if I post it. There's like 5 workarounds that we have. Keep that in mind, because if this court gets appealed, this ruling gets appealed and the government gets its way and it's set aside, then we're back into effect. They're going to give you a little bit of notice and you're going to say, hey, you have to comport with this residential reporting rule. So as soon as I hear anything, I will put it on my channel. In the meantime, you're not required to report, but know that it's still out there and that it could change at a moment's notice.